All right, and I'm going to pull up this sheet and I'm going to share it with my recording. Okay. And okay. All right, I am recording, just making sure. Okay, and I'm sharing my screen. Let's see, and I need to show you my screen. All right, so once you learn this Excel stuff, this is going to be a tool that you will definitely use. And if you haven't had Comp 241 yet, then I have asked them to cover Excel extensively because my accountants definitely need to know it. Okay. But managers need to know it as well because it is a fabulous tool for data mining and finding problems in your business by analyzing the transactions. Okay. All right. Is that make good? All right. So I'm going to try to clear all this stuff out. And I noticed I had something going down here, which I did not intend to do. Let me get rid of that. All right, what's the first thing we're going to do? What? Income statement. Has everybody memorized the account equation yet? Good. You know what that stuff is? What is assets? Everything the company owns, good, that has future economic value. Good. What does that mean? It can be bought and sold in the economy. Okay, it has value. Good. What are liabilities? Everything the company to outsiders. Good. And then what is owner's equity? Everything the company insiders. Very good. Okay. So everything we own then equals everything that we owe. Okay. So 2 ways to finance assets. That'd be a good test question. How many times have I said that? Anything that I say repetitively like that, good test question. 2 ways to finance assets. Debt and equity. 2 ways to finance assets, debt and equity. Okay. And of course, owner's equity breaks down into the part that is contributed by the owners, right? The part that's contributed by the owners came out of the pocket of the owners. That's called capital. If we're talking about a corporation, it's called what? Common stock. Thank you. Okay. And then the other part has been earned by the company. What do we call that? Retained earnings. Why do we call it retained earnings? Because it's been earned and not paid out. What do we call it when we pay it out? When we pay out money to the owners for thanking them for the use of their monies. Dividends. Good. Dividends. Good guess. That's a good guess. Okay. All right. So retained earnings breaks down into 3 parts. What are they? Revenue. What's that? Everything the company earned. Good. Minus expenses. What are expenses? Everything the company it's everything that cost us to earn that money right there. Everything it cost us to earn that money. Good. Okay. And then of course, everything, and this is what we've earned, right? What do we call that? What do we call that? Revenue minus expenses is net profit, or if the expenses are bigger, it's called good. Good. Okay. So this is everything we've earned, and then this is everything that we paid out, right? So everything that's left is what? Retained earnings. Okay, that's what everything that the company has earned from the beginning of its life until now that it has not paid out as a dividend. That's why it's called retained. Okay, good. Okay, first thing we're going to do is income statement. What goes on the income statement? Revenues and expenses. All right, does everybody remember how to center a heading? Thank you. Merge and center. Okay, so I'm going to make this heading 2 columns wide. And I don't think it'll let me do 2 at a time. I think it makes me do 1. Let's see. No, it makes it 1 cell if I merge the whole thing. I don't want to do that. So I'm going to unmerge. And I'm going to merge the top line. So I hit the merge and center. Everybody see that with the opposite arrows? And I'm going to merge the second line. Okay. And then I can either type this or I can come over here and I can right click and copy. And I can come over here and right click and paste. Or I can come over here. I like the shortcut keys because I cut my teeth on a DOS computer. Actually, my first computer was a Burroughs 3700. No, that's the wrong number. Forgotten the number. But it was a mini computer. It filled an entire room when I first started working for a CPA firm. So we didn't have mice back then. Well, we had the kind that ran around the floor, but not a mouse that you would use with a keyboard. So we did everything on the keyboard. Okay, so I'm used to that, and that's more efficient. I don't have to pick my hand up off the keyboard and pick up a mouse and move it around. If I know the shortcuts, I don't have to leave the keyboard. Okay, so it's whatever whatever floats your boat, but time is money in my business. Time is money. So I like to come over and hit Control C and go over there and hit Control V. It's quicker for me. Okay, good. Whoops, I don't want trial balance. What do I want? Oops. And of course, if I made an error, I don't want to go here and fix it. I have to go up here and fix it. Okay, see that? All right, and then of course, I want my date for well, I can just go over there and get it. I don't have to retype it. So I'm going to Control C and Control V. Here. All right, now, so I'm going to do revenue. What's my revenue account? Everything the company earned. How do they earn money? Yeah, they buy crap, mark it up, and sell it at a profit, right? So sales is my revenue account. So I can go get that guy, Control C, and come up here and Control V. And there's my sales. And then I can either go down there and get the number, or I can go, I can type in the cell reference. Let's see, that's C26. Everybody see why that's cell C26? Okay, so I can come up here and type, I want this equal to C26. Okay, or I can go down there and copy it. All right, let's see. I'll do that on the next one. All right, so next I want expenses. All right, so what's my first expense? Going to come back down here. And of course, all of my expenses, this company sells stuff. I can't. I need to cover a lot of territory. It's recording though, I promise. Are you good? Do you have a question? Yeah. You got it? Okay, now if you have a question, stop me for a question. Okay, but I'm going to try to get this finished today. So, okay, so this company sells stuff. So what's an important number that financial statement users want to see when a company is selling stuff? Cost of goods sold, and it's gross profit. Very good. Okay, what is gross profit? That's revenue minus cost of goods sold. So sales minus cost of goods sold, or revenue minus cost of goods sold. And that tells me how much I'm marking up my product. And that's important to know, because if I want to compare my company to other companies in the industry, I can see if I'm marking up more or less than they are. Okay, does that make sense? So, and of course, companies compare, customers compare, employees compare, suppliers compare, stockholders, financiers, everybody compares companies across the industry. So that's an important number. We want to watch that number and see what our gross profit or gross margin is. So I'm going to pull my expenses down. Okay, remember that? So if I made a mistake and I forgot a line, I just go hover over it until I get the arrows, and then I just left click and drag, and I can bring it down wherever I want it to be. So I don't have to retype that. Okay. Time is money, right? All right. So next I'm going to put cost of goods sold. What are cost of goods sold? The cost of the goods that we sold. Good. Okay. And let's see, that was C26. So this must be C27. Whoops. Or not. It's on the other side. So it's B27. Okay. See what I did? So I can use a cell reference and pull that. All right, and then I'm going to do gross profit. All right, what is the formula again for gross profit? Sales minus cost of goods sold. So notice how I did it. In order to do a formula in Excel, I just hit the equal sign, and then I can either type the cell or I can click the cell and then hit my operator. In this case, I want to subtract sales minus cost of goods sold. So I hit my minus, then I hit the cost of goods sold cell, and then it types the formula for me. Or I could have looked at it and seen that this is E6, right, minus E8. So I could have just typed that instead of clicking it. Sir. How to type the formula? Yeah. All right, so you just hit the equal sign, and that says I'm going to do a formula. So I can go up there and click the cell, and it types the cell reference. Just left click. And then I can hit my minus sign, and then click the other cell, left click, and then press enter. Got it? Good. Okay. All right. So it's gross profit. So now I'm going to change this to operating expenses. Not just expenses, because cost of goods sold is an expense, right? Remember, all assets. What's an asset? Everything the company owns. When an asset gets used up, it becomes a what? Good guess. Good guess. One of these. When an asset gets used up, it becomes, good guess, an expense. What is cost of goods sold? What was inventory on the balance sheet? Inventory is everything that we have available for sale in the ordinary course of business, right? When it gets sold, it becomes cost of goods sold, which is an expense. Prepaid insurance, when it gets used up, becomes what? Insurance expense. Okay. Accounts receivable, if it were to get used up, would become bad debt expense, right? The equipment that I'm using in my business, when it gets used up, it becomes what? Good guess. Actually, what do we call it? When it goes down in value, depreciation expense. Okay. So all assets either get collected in cash or they become an expense. All right. Make sense? Okay. All right. So our operating expenses, I'm going to hit my equal sign and come down here. Actually, I'm not going to hit the equal sign. I'm just going to copy it. I'm going to come down here and copy. So I can highlight this whole thing. All of my operating expenses. What's an operating expense? That's the cost of running my business, right? Everything besides cost of goods sold is an operating expense. Well, no, let me fix that. Interest is not an operating expense. Why? It doesn't relate to operations. It relates to debt financing. How did we finance? If we finance with debt, we're going to incur interest. Okay. So it has to do with financing. All right. So I'm going to hit Control C and copy that. And then I'm going to come up here and Control V and paste it back there. And then I'm going to come down here and get my numbers. So I can either copy them or I can cell reference them Just going to copy them. Okay. All right. Everybody see I did that? Just copy and paste. Now, I also could have cell referenced it. So I can come down here and say, okay, that's cell B28. Everybody see that over there in the corner? So I could come up here, and actually it's safer to do it this way. I could say equals B28 and pull that number. And then that way, if I come over here and for some reason I want to change this number, it automatically changes it in my statement. Okay. So it's good to use cell references, especially when you're doing financial data like this. Okay. If it's something that if you change it there, you want it to change everywhere else. And we often do that in business, that we want it to flow through the entire spreadsheet. Okay. So I'm going to hit my undo. Thank God for undo, right? Okay, so everybody good? Now I can take that cell. If I want to copy that formula all the way down, remember the little handle? This little handle, I can get a hold of the handle and drag that formula, and it'll copy that same formula all the way down. And it'll change the formula relative to where I copied it. If I copy it down one cell, it's going to change the cell reference by one cell. Oops. I didn't hardly go far enough. Okay, so notice that I had B28. So since I drug it down one cell, it went to B29, B30. Okay, so it changes it relative to where I copied it. Okay, so that's how you can do this really fast. Okay. All right, let's see. I'm going to move my interest expense down because that's not a part of operation. So I'm going to get a hold of that line, drag it down a few lines, get it out of the way. And then I'm going to call this total operating expenses. And I can sum that up. So I can either do it one at a time. I can hit equals and plus and do it that way. Or I can use the sum equals sum and then left parentheses. And then I can highlight the column. Whoops. Highlight the column that I want to sum up and press enter. Bam. Total. Okay. Or I can use the auto sum, that little Greek character. I can press that little guy. And he says, oh, you want to total that column? Yeah, that's right. Press enter, bam. Okay. All right. So multiple ways you can do that. Okay. Sorry. So that's my operating expenses. So the next thing I want, who remembers the formula for operating income? Or some companies call it income from operations. I'm going to call it income from operations. So it's gross profit minus operating expenses. So that's how much money I earned from operations, income from operations. And of course, I pulled my interest down because that has nothing to do operations. Because instead of financing with debt, I could have financed with owner's equity and incurred no interest. Okay, so interest does not have to do with operations. It has to do with how I chose to finance. Okay, so that's why we pull it down and we put it in the other section. So that's the heading of my section. Then I'm going to say net profit. Okay, and of course, my other, I'm also going to put any revenue that does not have to do with operations. Remember the one we did where we had rent revenue? So anytime a company has extra space that they're not using, they can rent that out to make money. I got a whole building behind my office that's full of apartments. And I rent that out because I don't need it for office space. So I rent that out. That's ancillary income to me. That's other. Okay, because my main income is accounting services. Okay, does that make sense? So anything that's not your ordinary normal way of making money goes down in other. Okay, so so your other can either be a plus, an income like rent, or it can be a negative, an expense like interest. All right, so I'm going to say income from operations minus other, and there's my net profit. Is that right? Is that what we got before? Is it? Yeah. Oh, it just looked bigger. Okay, so there's my income statement. What do we do next? Statement of retained earnings. Okay, so I'm going to copy this guy, Control C, Control V, just copy that whole thing over there. And I'm going to change this the statement of retained earnings. What's the formula for retained earnings? You're getting there. Okay, how about beginning retained earnings? Where do I find that? Over here on my trial balance. There's my beginning retained earnings. That's what I ended with last year, so that's my beginning for this year. Plus my net income, where I'm going to get net income. Or net profit, same thing. Bottom of the income statement, right? That's why I had to do it first. Where am I going to get dividends? Also over here on the trial balance. Okay, and then I want to calculate. So I'm going to hit an equal sign that tells Excel that I'm getting ready to type a formula. So I want to go, and you need to remember this formula. If you don't know it, you need to write it down. Remember, that's one of those 4 forms of learning. There's visual, oral, read, write, and kinesthetic. Okay, so kinesthetic is when you take your new knowledge and you use it. So you take like what you know about the accounting equation and all those elements, and you produce a set of financial statements. Okay. All right. So beginning retained earnings plus net income minus dividends. So notice I just put my different operators in there, put it all in one formula. Good. Makes sense? Okay. So that's my ending retained earnings. Now I'm going to come over here and make a balance sheet. I'm going to merge and center. Merge and center. And merge and center. Okay, now I'm going to copy this over there and type balance sheet. And remember, the balance sheet is not for a period of time, right? Because on the income statement, I need to know how much did I earn for what period of time, right? How much did I make for what period of time? So notice it says for the year ended. So I know that's a year's worth of results. That's what I earned in 1 year. Statement of retained earnings. How much did I earn? How much dividends did I pay out in that year? Balance sheet is as one date and time. So notice on the balance sheet, I'm just going to put June 30, 20Y7. So what that says is on that date, this is how much cash I had. On that date, this is how much equipment I owned. This is how much inventory I had. This is how much debt I had. And this is how much retained earnings I had on that date. Okay. So the others, all the other, actually, we're going to learn one more, the statement of cash flows. They're all for a period of time, but the balance sheet is one point in time. Okay. So all your assets, liabilities, and owner's equity at one point in time. All right, so first heading is going to be asset. That's everything that what? The company owns. Okay, now I'm going to separate the assets. There's 2 types, current assets and long-term. Okay, what's the definition of current? The accounting definition, I should say. Something that's going to be turned into cash or used up within 1 year. Okay, that's current. So current assets is going to be my next heading. And notice that all your accounts are listed in order on the balance sheet. So I can trace all my assets, right? So can you tell where the assets end and liabilities begin? Is cash an asset? Yes. Accounts receivable. What is accounts receivable? That's when customers owe me money, right? So I can't touch it. Is that an asset? What do I own? The right to collect that money. I own the right to send the take back man to break their legs, right? I own the right to collect that money. All right. That's an asset, accounts receivable. Inventory. That's everything that is available for sale in the ordinary course of business. And I'll put that last caveat on there because I might have an old delivery truck that's available for sale, right? But inventory is everything that's available for sale in the ordinary course of business. I don't sell delivery trucks every day, but whatever my main thing that I sell, whether it's widgets or shoes or groceries or whatever, that's inventory. Okay, so it's everything that's available for sale in the ordinary course of business. Right, estimated returns, that's just inventory. Worry about that. That's an accounting term, and I didn't need to put that on there. Okay, so that's inventory. So is inventory a current asset? Yes. Is it going to turn into cash within a year? It better, hadn't it? Because if I've got inventories laying on the shelf for more than a year, there's a problem. And I'm not going to be in business for very long, okay, unless I'm building space shuttle. Okay, office supplies, is that an asset? Is it going to turn into cash or get used up within a year? More than likely, okay? Prepaid insurance, is that going to get used up in a year? Yeah, that's an insurance policy. Does it have economic value? Yeah, wrap a truck around the tree and see if you don't have economic value out of your insurance policy, right? Because they're going to write you a check. So yes, an insurance policy is an asset. It has future economic value. Office equipment, is that an asset? There's things like desks and computers and copiers and stuff like that, calculators. That's office equipment. So it's an asset, right? Something I own that has economic value. Is it going to get used up in a year? Probably not, right? So the desks and the computers, they're going to last more than a year, maybe not much longer, but more than a year. So those are long-term assets. So therefore, prepaid insurance is the last of my current assets. All right, does that make sense? And of course, this is also property, plant, and equipment, also known as fixed assets. What's the three attributes for fixed assets? It's tangible, it's long-term, which means it's going to last more than a year, and I'm using it in the business, okay? So when I get down to property, plant, and equipment or fixed assets, same thing, interchangeable term, then I know that I've passed out of the current assets into property, plant, and equipment, which is long-term, okay? All right, so my current assets then are cash down to prepaid insurance. So I'm going to copy that, come over here, paste that, and let's see, B5 is my first. So I just looked at the cell. B5 is the amount for cash. Let's see. Does anybody remember how to make that cell automatically widen for me? Double click the right-hand margin. So you go up into the gray area till you get that black cross and just double click it, and it automatically makes the cell the right width for the data that's in it. Okay, right click. That's actually you double click. Okay. All right, and I'm going to pull my cash amount over there, which was B5. So I can just hit the equal sign, type the cell reference, it'll pull the number over, and then I can just copy that down, right? I can get a hold of the little handle and drag that down, and that's going to pull all those numbers over. B5, B6, B7, okay? Does that make sense? Is this a valuable tool? All right, and then I'm going to, yes, we are. It's just inventory. Yeah, sorry about the confusion. It's just inventory. All right, so I'm going to call that total current assets, and we'll learn later why that's important when we start doing ratios. All right, so now I can hit my auto sum up there. Just hit auto sum, bam, total current assets. Then I'm going to put my next heading, which is property, plant, and equipment. All right, and then I'm going to come over here. So office equipment is my first property, plant, and equipment. So that's B12. Got my heading. And B12, whoops, just typed it. Okay, and then remember accumulated depreciation? What's depreciation? The using up of a fixed asset or property, plant, and equipment. What's property, plant, and equipment? Tangible, long-term, and being used. That means I'm wearing it out. And when I record that how much I wore it out during the period, that's called depreciation expense. If I want to know how much it has worn out since I bought it, that's called accumulated depreciation. So I accumulate that from the beginning of its life until now. So if I look at a balance sheet, we have a rule in accounting that says office equipment, property, plant, all property, plant, and equipment has to be listed at cost. So anytime I want to look at a balance sheet, I can see if it says land, that's what was paid for it. That's the historical cost. If it says delivery trucks, that's what I paid for them. Equipment, that's what I paid for them. But then we also recognize that they're getting used up. So we have a separate line item that's called accumulated depreciation, and that's how much we're estimating, right? Because I don't know exactly how much it got used up, but I'm estimating that's how much it's been used up from the beginning of its life until that balance sheet date. Okay, so accumulated depreciation is a negative number. So we oftentimes put brackets around it to show that it is a negative number. It reduces our fixed assets down to book value. Okay, so accumulated depreciation. B. C14. And I can put it as a minus. So I can go up here and put a minus sign in front of it. It'll make it a negative number. And I can put brackets around it. So I can format it to accounting, and it'll put brackets around it. And take the dollar sign back off. Oops. I can format sales. Whoops. That's not what I wanted to do. Is that not what it is? Yeah, it's in the second column. Accumulated depreciation is 58,000. And because it's a negative number, that's why it's in the other column. Okay, store equipment, same thing. All right, let's see. So I want to take that dollar. I'm going to right click and format cell. I want to take that dollar sign off. Actually, I could go back and just make it general. So instead of accounting, let's make it general. But I want the brackets. Let's make it, we'll deal with that later. We'll just leave it a minus. Okay. I can format cells and make it do anything I want, but I don't want to waste the time with that right now. We'll do that later. All right, so next I have store equipment. Control C, Control V, and then I have computer accumulated depreciation for store equipment. Whoops, what happened to you? All right, store equipment is at B15, depreciation is C16. So B15, and I'm going to say equals minus C16. C17, thank you. Okay, good. All right, and that should be all of my property, plant, and equipment. And it is, so the next thing I have is accounts payable. What type of account is accounts payable? Type of account? Liability. How do you know that? Because it says payable. What's a liability? Everything the company owes. Okay, so I'm going to say total property, plant, and equipment. Shorten it. Okay, and so I'm going to sum this up. Now I can, since I put minuses on my accumulated depreciation, I can just sum it up because it's going to add the pluses and subtract the minuses. Okay, so there's my property, plant, and equipment. All right, so now that's my total assets. So I can put my total assets as a heading. And I can come right here. And I'm actually put it in this other column. I'm actually going to move my current assets. I'm going to drag that over. And my property, plant, and equipment, I'm going to drag that over to make them stand out better. And then I'm going to add those two numbers together. So equal sign, click the first number, hit the plus, click the second number. There's my total assets. All right, so next I want liabilities. And I want current liabilities first. So what are current liabilities? Everything that has to be paid within 1 year. All right, I'm going to get on my liabilities. So what type of account is common stock? Type of account is common stock. Stockholders' equity, exactly. It's capital. Okay. So stockholders' equity, more specifically, it's capital because it came out of the pockets of the owners. So I'm going to copy that. Control V. And my accounts payable was what cell? C18. Oops, I need to make my cell wider. So I'm going to go up there and hit that right margin again. All right, so I want C18. And I'm going to copy that down. But notice that I have a long term, that note payable long term. So that's not current, right? Because that's not going to be due within 1 year. So I'm going to get a hold of that line and drag it down so I can put my total current liabilities. Okay, notice that line that says current portion of long-term debt. What does that mean? If I'm paying a mortgage payment, and I usually pay that monthly, right? And maybe it's a 15-year mortgage. So 1 year, those payments is going to be paid within 1 year, right? And the other 14 years is long-term. So the portion that's going to be paid this year is current portion. Okay, so part of the long-term debt's going to be paid this year, part of it's going to be paid in future years. So the portion that will be paid this year is current portion of long-term debt. It'll always be under current liabilities, yes. All right, I'm going to sum those up. I'm actually going to sum it over here. And notice that it wants to put it over there, but I want it here. So I can force it to do that. And since I only have one long-term liability, I'm going to drag that over there. Okay, so that's my total liabilities. All right, I'm going to sum those up. So current plus the long-term equals my total liabilities. Next, I want owners or stockholders' equity is usually what we call it, since this is a corporation. Stockholders' equity. And the first one is common stock. Actually, I'm just going to copy both of them, Control C and Control V. And my common stock is at line C23. So equals C23. Where do I get my ending retained earnings? Off of that retained earnings statement. That's why I had to do it second, right? Before I could do the balance sheet, because it didn't have my ending retained earnings. Okay. All right, so now I'm going to total it. Total stockholders' equity. Whoops. Spell it right. All right, and then I'm going to come over here and total that. All right, and then I'm going to add total liabilities and stockholders' equity. And that's going to equal what? What is liabilities and owners' equity equal? Total assets, right? That's what the equation says. Okay, so I'm in balance. Pretty good indication I did all that correctly. Okay, does that make sense? So you learned a little bit about Excel, and I encourage you to practice Excel. Practice Excel. It's a great tool. So we'll use it some more. And I finished 3 minutes early. All right, I'm going to stop the recording, so don't forget to do that. All right, any questions?